Hello and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. Stocks climbing here, mostly driven by a rebound in tech and a jump in oil prices. We're digging into those stories, plus big earnings from Intel and Ford on deck after the market closed. And right now, there's just an hour to go until the closing bell. Stocks are higher. Just looking at the popular average here, you have the Dow up about 170 points. The S&P 500 is up about 0.7%. Tech-heavy NASDAQ is up about 1%. Let's welcome in now our markets and data editor, Jared Flickery, now with a closer look at the day's trading action so far. Jared.
Thank you, Josh. Nice reversal in fortunes for tech today, especially in the chip sector. We'll get to that in a minute. First, want to show you what's going on in the Dow, the People's Index here. We'll slide this down into an intraday view. A little bit of red there around the first hour of trading, but we are up about 1/3% or 165 points now. Nothing to write home about, but green is green, as they say. NASDAQ Composite up an even 1% and pretty close to the highs of the day that we're looking at right now. S&P 500, fairly similar chart, up a little bit less, 0.7%. And I do want to show you what's going on in the small cap space. Russell 2000 up 1.5%. That was leading to the downside yesterday. So a reversal of fortune indeed. Also, I've been tracking volatility. I'm going to show you a 10-day chart of the VIX. We are back down to the levels kind of before we got that Friday China tariff scare a couple weeks ago. So that's good news on the volatility front. Some fear evaporating from the market, at least getting priced out there. And the 10-year T-note yield, that is up 4 basis points. That's not nothing. That's a fairly decent move to the upside there, approaching 4%. And the 30-year at 4.57%. That's up 3 basis points from yesterday. U.S. dollar index just about trading water there. A little bit green, we'll call it that. And then in sector action, as you said, Josh, energy leading the way today. We got an S4A covering the moves in the oil patch in a little bit, but tech is number 2. That's up 1.33%, followed by materials and industrials, close on its heels. All those 4 sectors are outperforming the S&P 500 to the downside. One of the leaders yesterday was Staples, but it's down 0.5% today. And communication services, that's down just a tiny bit. Here's a NASDAQ 100, a lot of green here, and you're going to see NVIDIA, biggest stock there in the solar system, up 1.33%. Broadcom up a little bit more, Amazon up 1.5%, Tesla up 2%. And I'm going to do a deep dive into the industries within tech. Here are the semiconductors. Just look at the picture. We got some dark green on your screen there. And then in software, a little bit less bullish. We do see some red. IBM, which was celebrating some nice moves recently, that's moving to the downside, but Oracle, that is up 3%. And I will leave us off on the Dow transports. And this is one picture of red that we're not seeing necessarily elsewhere, but I will point out that American Airlines, that is up 5% today. Back to you, Josh.
All right, thank you, Jared. And we're watching those commodity moves as well today. Oil prices surge as Trump sanctions 2 Russian energy giants. Senior reporter Inez Ferre joining us now. Inez.
Yeah, Josh, those sanctions on those 2 oil companies, Russian oil companies, sent crude oil higher by more than 5% today. We are watching WTI, which settled above $61 per barrel. You're also looking at Brent crude that settled above $65 per barrel. I spoke to Rebecca Babin earlier today, who told me that the key question will be how enforced will these sanctions be? Will China, will India be continuing to buy Russian oil? Because you have had sanctions placed on Russia by Europe, namely that some of these sanctions, there have been workarounds done by Russia. So this is, of course, an attempt to end the war in Ukraine. But nonetheless, this also happens when oil has been on a downward trend. We saw 3 weeks in a row where you saw oil going lower. And year to date, you're watching WTI that's down 15%. Brent is down 13%. So you'll recall that President Trump has talked quite a bit about keeping energy prices low. This comes at a time when those energy prices have been low.
All right. Thank you, Inez. Appreciate it.
Thank you.
Volatile week on Wall Street so far, and we're tracking how investors are positioning their portfolios heading into a Fed meeting in the back half of earnings season. Joining us now in studio, Justin Livengood, Senior Portfolio Manager at Invesco on the U.S. Growth Small Mid-Cap team. Justin, great to have you on set. So more green today in the stock market, Justin. Maybe we'll start there. Do you see any signs, any signals in the stock market that makes you think, you know what, I'm concerned maybe that could derail this market in the near to intermediate term here?
What I'm not concerned about is the fact that earnings continue to come through really well, and we're about a third of the way through this earnings season. It's been positive. I think across different industries and sectors, companies are delivering at or above expectations, much like we saw in the second quarter. So that's been on the plus side. To the extent that changed, if we saw some deterioration in earnings results as we move through the rest of earnings season, that would be a concern. The other thing I guess that gives me a little pause is there's a lot going on in the sort of the fringes of the market that does worry me about the amount of speculation happening, right? I mean, we're seeing a lot of options activity, a lot of retail trading. In fact, yesterday was the busiest day in the S&P 500 volume for retail trading in 5 years. So there are a lot of people in the market at the moment, again, on sort of the periphery, that are trading things aggressively, and it's bearing some watching. That partly explains why we had a little bit of a momentum correction over the last week. Some of those kinds of stocks and investors were shaken a little bit out coming into this earnings season. But I don't yet think that's risen to the level of being concerning for the overall market, something, though, that bears watching.
CPI report tomorrow.
Yep.
What would you expect to see there? Do you think, Justin, you could see anything in that report that might knock the Fed off course, or at least what we think is the Fed course, which is a cut? I mean, the market thinks that cut next week, that's a lock.
And I agree with the market. I don't think it's likely next week's cut is at risk. I do think tomorrow's CPI number has a lot of potential impact on the subsequent meeting and the path beyond October. I'd be a little surprised, actually, if the Fed cuts again after October. The economy is growing 2.5–3%. Inflation, we're going to probably see tomorrow, is still pushing 3%.
But Jay Powell, he's concerned about that labor market.
He is, but that labor market is actually holding in relatively well, we think. Again, we don't have full data at the moment, but from what we can tell, especially at the higher end, and higher-end consumers are spending well. Lower-end consumers are hanging in, albeit with a little less confidence. I think he's more concerned about inflation and frankly, the whole Fed board than perhaps people realize. And I think he's also a little concerned about overstimulating an economy that's doing fairly well, all things considered, even if the jobs picture is a little bit muted. So yeah, if jobs get worse as we move through the balance of the year, that might turn around the odds towards a little bit more of a faster pace on cuts. But my personal bet is that after next week's cut, we might see a pause for a little bit in Fed activity.
I'm interested to get your take on inflation and the trajectory you see there, because some folks say, Justin, I've had folks sit in that chair and say they're just not that concerned, because they'll say labor market's cooling. They'll say, I see deflation out there. I see energy complex. Okay, oil jumping today on U.S. Treasury hitting Russia, but even so, I mean, WTI's are like 61, 62, gas prices falling, rents cooling. But how do you see it?
I still see some inflation. I wouldn't call deflation yet a focus. Tariffs are still having an impact. We're hearing companies right now in earnings talk about passing through some of those costs, depending on whether it's manufacturing or even consumer businesses. So there's definitely some inflation in the system. I think the consumer is going to feel that a little bit more as we move into next year. Not significantly, but noticeable. I also think that businesses have pricing power even beyond cost inflation. The economy is robust, and certainly a lot of parts of the economy, industrial companies, some technology companies that were green on your screen a minute ago, are enjoying some unusual pricing power in different products and parts of their business. That probably continues, and that might also keep inflation at a little bit of an elevated level. This is why I think the Fed isn't as complacent on this topic maybe as the market believes.
Earnings season does roll on. Big tech and AI have been driving this bull market. I'm curious to get your take on that theme.
Yeah, still bullish. I still think that theme has a long way to go. I think the amount of money that needs to be spent to properly roll out the AI ecosystem and all of the associated power and infrastructure that goes with that is in front of us. The amounts of money that are being discussed are also financed. One thing people always ask me is, is this different than the tech bubble 25 years ago? Well, the companies writing the checks for all these big data center projects are, some of the best funded companies in the world that have enormous amounts of cash flow and cash in the bank. These are not speculative orders and contracts. These are take-or-pay contracts from fully financed companies that have a full intent and idea of what they're going to be doing 10, 20 years from now with these different assets. So I don't think that this is, in any way over. I do think you need to be careful at times and to make sure you're investing in and focused on companies that are properly positioned to benefit from the way this ecosystem is being built out. Again, I think there's some great companies in mid-cap industrials, for example, that help do engineering and construction and other pick and shovels elements that support this theme. So I don't just look at the theme as large cap tech. I think there are a lot of different ways to participate in it, but I think it has legs.
One other theme I want your take on, geopolitics. U.S., China, because now we know Trump and Xi set to meet next week. South Korea, I think it's going to be late Wednesday evening Eastern time. How as an investor are you thinking through that?
It's a great question. I'll be honest, right now I'm still suspicious it's going to happen. But if it does happen, I'm very focused on, quite honestly, the Taiwan situation. I think one underappreciated risk to the equity markets is if anything ever did happen with Taiwan that would jeopardize sort of the semiconductor ecosystem, that is a major tail risk type event. So as an investor, I'm particularly concerned about sort of China-Taiwan discussions and relationships. Secondary relationship is then tariffs and sort of where they're able to hopefully break bread and get to a common ground on in terms of the tariffs in both directions. I don't like the way that things escalated on rare earths a few weeks ago. I'm glad that it seems to have walked back a bit, and I would hope that if they do meet next week, they're able to keep walking things back. So I'm optimistic.
There are some strategists who I hear say, listen, when it comes to Trump and Xi, their bet is you can get some huffing and puffing and some bad headlines, but at the end of the day, their bet, they tell clients, is you're going to get a handshake and a deal because the risk of not getting one is too great for both parties.
I largely agree with that. Yeah. I do think there's a lot of huffing and puffing. Handshake and a deal, we'll see. They're both master negotiators, and they both think they've got the upper hand. So I'm not sure we're quite to the point yet where they both feel they need to reach across the table and shake hands. So we might have a meeting that ends somewhat inconclusively. I don't think that's the end of the world for the equity markets if we end that position. I think the worst situation might be there's no meeting and there's more of a contentious discussion and we have to worry about incremental tariffs from two sides that don't want to yet talk. I doubt that's where we end up again. I think we have a meeting. I'm less certain on where we end up once the meeting occurs.
Justin, great to see you, especially on set. Thank you, sir.
You bet. Thanks.
Coming up, Wyndham Hotels get sent packing, hit by travel pullback in the U.S. We're going to explain more what's sending that stock lower today. We're also keeping an eye on Intel and Ford ahead of their earnings reports, which are coming out after the market close. We'll bring you the numbers as soon as they hit the tape. Stick with us. Now time for some of today's trending tickers. Yahoo Finance's Brooke DePalma joining me now for a closer look at Tractor Supply, Wyndham Hotels, and Molina. Going to start off with the Tractor Supply, the company topping comparable sales estimates for the third quarter, narrowing its full-year net sales guidance. So this one was interesting. So net sales for Q3, Brooke, looks like they increased about 7%. Same-store sales jumped 3.9%. I do see D.A. Davidson, the team over there that covers the name, I see them cited as saying, perhaps more importantly, they said the ticket size increased by 2.7%. They know the biggest increase in 10 quarters. We did mention it does look like they did narrow expectations for comparable sales and margins for the year, citing tariffs and consumer demand.
Yeah, and that's what the concern was that the 2025 guidance for net sales growth, they did say that it implies essentially a 6% gain for Q4. That would be less than what we saw in Q3. But other things that they noted was that these big tickets, this discretionary, those big ticket items, they're not necessarily rebounding the way that maybe some had anticipated in the back half of the year. For the fourth quarter, they do anticipate a comparable store sales range in the range of 1% to 5%. They said that reflects a wider set of possible outcomes given the current consumer environment. Also, those discretionary items, think items like recreational vehicles, grilling, safes, and generators, those sales continue to lag. So once again, just continuing to see this dynamic where consumers aren't necessarily going back to these big ticket items, but also keep in mind, this is a retailer that really dedicates itself, its consumer base is those rural communities. And we have seen this trouble that these rural communities have faced. Lots of farmers right now also getting hit, but we did see the Trump administration had said they plan to release over $3 billion in aid to U.S. farmers. One key, thing about Tractor Supply is that these are reoccurring demand, though. Think like food, those usable items, things that essentially they need to refill their stock with. And so maybe that's good news there.
All right, moving on to another one. Wyndham Hotels, as the company slashes its full year outlook and misses third quarter revenue estimates. All right, so actually the biggest intraday drop since March 2022, Brooke. And the culprit was, I think, reducing annual guidance. That'll do it. They now see adjusted EPS between $4.48 and $4.62. The stock, this is rough. It's at about 25% this year now.
Yeah, this reminds me a lot of what we have been discussing. Essentially, Wyndham really caters to a large array of audience. So we saw that luxury demand travel go up, and we saw some of their perhaps hotels that cater to a lower income audience. We saw that revenue per room, really decline in this past quarter. Of course, keep in mind, they're behind hotels like Super 8, Howard Johnson, Ramada. So really just this array where they kind of got hit by this bifurcation that we're seeing.
Yeah, the stocks, listen, we said it's been rough. The street sees better days ahead. Broadly, I'm just looking positive on this thing. We got 14 buys, 2 holds, no sells, Brooke. No sells, no bears.
Optimism there, bullishness there.
Lastly, Molina Healthcare shares dropping as the company's earnings take a hit amid rising medical expenses. So this one, all right, in the red, they miss on EPS for the third quarter due to rising medical expenses, slash guidance for the fourth quarter. Now, thankfully, our colleague Jake Conley did a report on this. I say thankfully because this gets wonky.
It is pretty wonky.
It really gets wonky, but as Jake pointed out, the crux of the problem is this critical measure for healthcare providers, basically the ratio of premium revenue to medical expenses.
Yeah.
That's the issue, MCR.
And so what it really narrows down to is this rising cost around the Affordable Care Act and Medicare plans, and that's what hit the company's profitability during this quarter. Next year, the company said they do expect these medical expenses cost to continue to climb, and that's why we're seeing this major pullback. It's the biggest intraday move when it was down 21% during today's trading session since July. And so certainly there's this negative rhetoric around what exactly these rising medical costs, specifically around the Affordable Care Act, could mean for not only Molina Healthcare, but we're also seeing other companies also get a pullback on this news, like Centene, Oscar Health, really those companies where this Affordable Care Act risk is prominent for them.
Yep. All right. Thank you, Brooke. Appreciate it. Well, Vertiv Holdings beat Wall Street's expectations for the third quarter. The company also providing better than expected guidance for the full year and strong demand in the digital infrastructure industry. Vertiv CEO Gio Albertazzi joins us now to discuss. Gio, it is good to see you. So let's get right to this earnings report. Your stock is shooting higher in today's trade, Gio. You're now up some 60% this year, a strong run. One metric that jumps out, Gio, and this is where I want to start. Your organic orders were up about 60%. Walk me through that, Gio. What is driving that, and how much is that due to this great AI data center build out we talk so much about, Gio?
Well, first of all, thank you for having me. Of course, very happy about the trajectory of orders, and the strength of orders visible, of course, on the year-to-year quarter performance that you mentioned, but also if you look at trailing 12 months, it was 21%. So we are showing growth and strength and strengthening backlog. And it's really combination of two things. One is the industry we serve, the data center industry, and specifically the AI-driven acceleration in the data center industry is very positive in and of itself. But also, we believe that our offering, our value proposition is gaining us market share. So we are growing more than the market, and we've been, of course, deliberate about that. And it's a promise that we have made to our investors already 2 years ago, and we are delivering on that promise.
I'm curious, Gio, based on your business, do you see any signs, any signals that great AI infrastructure build out is cooling in any way?
Of course, we are very, very present in the market. We talk to all the players, all the large players. We have a very strong visibility in terms of our pipelines, and we continue to be very optimistic and very bullish about the direction in which the market is going. So we believe this is a long trend and a strong trend, a secular trend indeed.
Let me ask you too, Ajay. You did raise, it looks like, your full year 2025 guidance. What gave you the confidence to do that, Gio, given that, listen, there are a lot of powerful cross currents right now?
Well, it is, again, about the strength of the backlog, the strength of the execution, continue to deliver on a positive price cost that we have done and will continue doing. And we have very good visibility on the quarter and the trajectory we've been on, and what we see of the last quarter certainly are encouraging, and we're the reason why we've taken our guidance up for the full year.
Gio, you also did mention tariffs in this earnings release. How much of a headwind is that posing? If you could break that down for us, and how you're navigating that dynamic, Gio. What levers are you pulling as a CEO?
Well, certainly the levers are leveraging a very resilient supply chain, and there certainly is a nearshoring reconfiguration of supply chains. Luckily, been working on supply chain resilience for the last 2.5, 3 years, and that is certainly delivering on. We see the fruits of our efforts. So it is a lot about reconfiguring our supply chains to make sure that the counteractions, if you will, to offset the impacts of tariffs are implemented, and implemented with precision. And that's what we see is happening. I'm quite pleased with the way we are addressing the challenge, if you will, and responding to the challenge.
Jay, I only have a minute left. I am curious, though, to get your take on how you see, if at all, the competitive landscape shifting for you. What you're bringing to the table that's different, given, listen, there are other companies, of course, still chasing this AI infrastructure story.
I think it's multidimensional. Let me mention a couple of important elements. We know the data center space very, very well. We've been in this space for multiple decades. We have, we believe, one of the most, if not the most, complete portfolio in data center infrastructure. That makes us a privileged interlocutor for all the great players, all the silicon side, NVIDIA, or hyperscale, colo. So being kind of a primary actor in the space helps us a lot, because it helps us drive the industry from a technology capacity and thought leadership in the right direction. And then we have unparalleled, we believe, very strong service, and service is very important in this critical environment. But certainly, last but not least, we are increasingly, constantly, our investment in innovation and R&D, and this continues to strengthen our lead. Plus, you got to invest in capacity, because the industry is growing, and being able to fuel the growth through capacity, being able to serve our customers, is absolutely essential.
Gio, good to see you as always. Thank you.
Thanks a lot.
We're wrapping up today's Market Domination. Don't go anywhere. We've got you covered with all the action following the closing bell, including those important Intel and Ford earnings moments away. Stay tuned for Market Domination Overtime. That's closing bell on Wall Street, and now it's Market Domination Overtime. We're giving you full coverage of all the moves to get you up to speed on the action from today's trade, and Yahoo Finance's Jared Blickery Joining us now with the latest market action. Jared.
Thank you, Josh. On the back of energy and tech, we had a reversal today from yesterday. Dow finishing up with some modest gains, 144 points or 0.3%. Quick look at the intraday price action. You can see off of the highs, but still in the green for the day. NASDAQ, the leader among the three majors, up about 0.9%. And I want to show you the S&P 500 real quick, but mainly the Russell 2000. Small caps outperforming after really lagging yesterday, kind of tumbled, but not today, finishing the day up more than 1%. And in sector action, I mentioned energy, that was the top spot. Tech is number two, both of those up about 1.2, 1.3%. Then you have industrials and materials, all four of those outperforming. So the cyclical sectors plus energy doing pretty well today. And what is not working today, those were largely yesterday's leaders. And so that was indeed a signal of the reversal that I was talking about a little bit earlier. Now in the NASDAQ 100, we got a lot of dark green from chip stocks. So chip stocks really led the day here. NVIDIA in the upper left, that's the biggest chip stock, up 1%. Tesla also notable, up 2.25%. And I just want to focus on the Dow real quickly, where we see a little bit more red. Verizon kind of towards the bottom there, down 3.5%. Also seeing some weakness in the staples and healthcare sectors that I was talking about a minute ago. Johnson & Johnson in the red, so is Walmart, Home Depot. That's cyclical, but that was down 1%. Coca-Cola, that staple name, down 1% as well. But let me show you what I'm talking about when I say energy was looking green today. We got a number of these issues up more than 3%. ConocoPhillips, Marathon, Schlumberger, Diamondback, Baker Hughes, Halliburton, Devon, all of those up more than 3%. Apache here looks like it was up more than 7.5%. And just kind of ticking down some of our screens, I noticed that aerospace and defense had a really nice day. Some of those ETFs putting in all-time highs when we did not really have a lot of record highs in other areas, but defense did well today. You can see GE up almost 3% there, HWM up over 4%, and agriculture too. Futures were pretty much in the green today, had some interesting action in OJ futures. Not that it's related to this, but also wanted to show you real quickly aerospace. And I will end on this note. Honeywell up almost 7%. And so really one of the best performing sectors in the wake of that post-Liberation Day sell-off, that would be aerospace and defense, once again surging today. Back to you, Josh.
All right, thank you, Jared. Well, Intel's third quarter earnings are just now hitting the wire. Stocks popping more than about 4% here. Let's get you the numbers. So Intel reported $13.7 billion in revenue for the third quarter here. That is higher than the $13.15 billion expected by analysts. Just looking for the adjusted earnings per share. There it is, 23 cents. That's above what was projected. Turning ahead, fourth quarter, adjusted EPS of 8 cents. That looks like it's less than what was estimated. The chipmaker forecasting revenue here, $13.3 billion at the midpoint of the projected range. That looks like it's below the $13.4 billion that was expected. Although I do see headlines as well that Intel is saying that guidance would exclude Altera. Also, just looking quickly here through some of the divisions. Manufacturing arm, Foundry, there it is, reported an operating loss of $2.3 billion for the third quarter. That was wider, it looks like, than what was expected, but an improvement from the previous year. Statement here from CEO Lip Bhutan saying in a statement, AI is accelerating, he says, demand for compute and creating attractive opportunities across our portfolio. Well, for more on this, Intel's third quarter earnings just crossed the wire. Let's get more reaction. We got Ben Beharin standing by, CEO and principal analyst at Creative Strategies. You know, Ben, heading into this print, I mean, stakes were high for Intel. You know, heading in year to date, that stock was up 80% heading into the report. And at least initially here, Ben, it looks like that stock's moving higher. But what are your initial thoughts on the report?
Yeah, I mean, I think it's good. I think you're looking at everybody wanting to see, more of a structural recovery, obviously balance sheet, looking at some of the roadmaps that they've had. We're coming off an event where they're launching and have launched the official products for next year, both for CPU and data center. So I think there's, cautious optimism. I feel like that's kind of been the case like over the last year, just looking at Intel. And I think everybody just wants to see steady steps in the right direction. And really that's what looks like happened here. I mean, revenue was good. You're right. I think the guide was just slightly low only because of Altera. And really, I think the all eyes move to Foundry here as we look for the next year, where just, again, a lot of the upside is in the hopes of not just product volumes, but also Foundry opportunity with other customers.
Let me ask you about, you get this report as the investments were just pouring into, White House, NVIDIA, SoftBank, billions pouring in here. What are they doing with that money, Ben? What should they be doing?
I mean, a lot of it's still just balance sheet. I think they're just trying to still get the capital under control. There's not a lot going, again, into investments at this point, right? In terms of CapEx, we haven't seen an increase in CapEx yet, which would sort of be an indication of what's going on for 14A, right, as the next node in Foundry. So I think a lot of this is still execution, right? They're just starting to ramp Panther Lake and Clearwater Forest, which will be based on 18A. These are also going to be high-end chips in the market, right? They're not chasing the low end yet. Where they'll see significant volume come back to Foundry. They have better wafer economics than they did when they were making these products at TSMC. So a lot of that sets up, I think, for a good couple of quarters, if not a strong 26, as we see what happens in the PC and the data center landscape. But I think, again, product side is not really where people have had the most concern. It's still been, what are you going to do with Foundry? It's a huge expense. They want to see customers and revenue opportunities from the Foundry side.
The knock on Intel I was hearing, Ben, for some time was, listen, where was this company in that great mega AI trade and trend, right? So what is CEO Lip-Butan's plan there? What is his AI strategy? What investments is he making, Ben, so that, at the end of the day here, he's going to create a great, compelling, competitive product?
Yeah, I mean, there's two things. I think, the CPU or the role of the CPU, both in desktop and server, doesn't go away in the AI era. In fact, I think there's some evidence that it becomes even more important, if not to see CPU as a category in data center, as a growth opportunity, both in dollars and volume. And obviously, what he's done with NVIDIA becomes a really interesting strategic lever, because you could argue that they're going to leverage NVIDIA's dominance across the stack, especially even in data center, and tie their CPUs more to the upside in NVIDIA. So while that might be less attractive for those who want to see them, really pull out an AI accelerator and go after the volumes from a GPU or a dedicated AI ASIC, the opportunity there to be the preferred or the head CPU head node of choice for NVIDIA actually becomes a really interesting upside. So I think there's variances there to see how that plays out. Again, we don't want them to completely give up on this idea of GPU or Intel-based ASICs for inference. But right now, right, as you know, it's an NVIDIA show, and I think being tied to NVIDIA is actually a net positive for them, both in client and in server.
That Foundry business, Ben, how successful do you think they're going to be there? Policymakers in Washington want to see them successful for geostrategic reasons. But what do you see ahead in terms of attracting external customers for 14A, that next-gen manufacturing process?
Yeah, I mean, I think you look at this where, we want to see some customer engagement, some customer work with the PDKs that will come out eventually for 14A, just to see the quality. I know, just from having talked to a lot of folks in the industry, especially in the supply chain, a lot of people wanted to see Intel deliver their product roadmap. So that's Panther Lake and Clearwater Forest on 18A before they would, really take this seriously. Essentially, it was approve your process, your packaging is state of the art. And if it is, then we'll take a deeper look at it. And it feels like that's the case. Panther Lake's a good product. Clearwater Forest is also a very good product. And so I think this will help people, justify taking a deeper look at the quality of 18A. And then we just go from there, right? They need customer wins. They need wafer customer wins for 14A, which will also slightly come backward to 18A and 18AP, but they need that customer to commit so they can commit to 14A.
Final question, Ben, just the minute I have left. Lip-Butan takes over in March, got a turnaround plan. He said it's going to take time. What do you make of his plan, Ben? Does he have the right priorities in place?
Yeah, I mean, I think so. I think he's been a very good deal maker, to be honest with you. I mean, obviously, the deal with the government helps. The deal with NVIDIA helps. I imagine that there's still some more very strategic deals coming. It seems like he's very willing to be customer-centric and essentially just say, what do we need to do, right, to become partners and have you work with Intel and Intel Foundry? So I think that's positive. And obviously, I think everybody's happy with what's happening on the balance sheet, that they're getting costs under control. We want to see them continue to invest and execute. And I think this quarter is evidence of that. And if this ramp for 18A products is good, like I said, I think that still sets up well for Foundry. So his leadership, his willing to be dynamic, his willingness to maybe do things differently from a deal making standpoint, I think is helping. But again, we need more customers to come to Intel Foundry, and so I think he's the right person. But I think everybody will feel better when we see a couple of customer commits to go forward for Intel Foundry.
Ben, always great to see you, my friend. Thank you.
Likewise, good to see you, Josh.
All right, continuing with earnings here, we got Ford's third quarter results. They're just out. Yahoo Finance's Pras Tumrining join me here with a closer look at the numbers. Pras, how'd they do?
Yeah, Josh, a lot to go over here. So Ford reported third quarter results at top estimates, but projects financial hits due to the aluminum plant fire that impacted Ford's franchise F-150 pickups and SUVs. Ford said the Novelis aluminum plant fire will result in a 2025 adjusted EBIT headwind of $1.5 to $2 billion, which will also affect full-year cash flow. But the company is expected to mitigate at least $1 billion of that in adjusted EBIT in 2026. So now, the full hit from the Novelis plant fire will be taken in Ford's fourth quarter. As a result, Ford adjusted its full-year guidance lower, now seeing adjusted EBIT of $6 to $6.5 billion and adjusted free cash flow of $2 to $3 billion. Ford said the production disruption results in an oversized short-term impact on our working capital, which will reverse next year, and capex of around $9 billion. Now, Ford CFO Sherry House said in a call with reporters that Ford would have boosted full-year guidance if not for the Novelis fire. They're tracking at $8 billion plus in adjusted EBIT for the year. Ford CEO Kumar Galhotra added that F-150 production would experience disruptions over the coming weeks. Now, Ford announced plans to increase F-150 and F-Series Super Duty production by more than 50,000 trucks in 2026 to meet demand and recover production losses due to that Novelis fire. However, F-150 Lightning EV pickup production will remain paused to prioritize gas and hybrid production. Now, for the quarter, Ford reported automotive revenue of $47.185 billion with adjusted EPS of 45 cents on adjusted EBIT of $2.6 billion. There you go. All the numbers.
Boom. Let me ask you a quick one.
Yeah.
You're on the conference call. They come to you. You have the opportunity to ask CEO Jim Farley a question, maybe two. What will be top of mind for you off these results?
Well, also, I did not add that they saw that tariff mitigation efforts are improving and that with this MSRP offset, they're able to cut their tariff exposure from $2 billion to $1 billion in 2025. So maybe some more questions on like how that happened, how they're able to do that retroactively, that sort of thing. Also, I mean, we're going to hear more about Novelis, right? Like how bad is it? The CEO Galhotra was a little bit not cagey, but a little bit quiet on how bad the disruption is for F-150. You wouldn't say that at the moment if it's paused fully right now because, the F-150 is fully aluminum, right? The whole body. You don't have aluminum parts. How are you going to make that? So that's a big issue, and I think we're seeing that with stock down and that big hit to the charge to the fourth quarter coming up.
Pras, thank you, buddy. Coming up, Elon Musk making his case to Tesla shareholders for a $1 trillion pay package, getting one investor's take. But first, you just heard Intel's results, but do you know what a semiconductor actually is? Tech editor Dan Howley breaks it all down.
From your smartphone and your PC to the refrigerator in your kitchen and the car in your driveway, semiconductors are virtually everywhere. But despite the near ubiquity of such chips, they're still relatively misunderstood. Semiconductors are complex products with billions of microscopic switches. But to boil it down to less complex terms, it's the stuff computers are made of. So when we're talking about semiconductors, it can refer to a wide range of things across the entire chip ecosystem. Some of the biggest names in the sector, like NVIDIA and AMD, design their own chips, meaning they come up with the blueprints for how the chips will work, what tasks they'll perform, and how all the billions of tiny switches inside should be arranged. But those companies outsource fabrication to companies like Taiwan Semiconductor that specialize in building processors. That's a type of chip that does the actual thinking or computing inside of a device. Then there are companies like ASML. It develops the machinery necessary for photolithography. That's where manufacturers print tiny patterns onto chips to make them work. So let's walk through how chips are made. Each chip starts out as a wafer. That's a thin slice of silicon that serves as the base layer for making chips. Silicon is a natural element found in sand. Manufacturers then polish the wafers and, using photolithography, draw a series of circuit patterns onto its surface. Next, several layers of material are built up and etched, creating the building blocks of the chip. Chipmakers then cut each individual semiconductor out of the larger wafer and package them, allowing them to be placed into everything from the phone or laptop you're watching this on to your video game console, watch, or even your treadmill. All of this can take months to complete. And they're not just built in one place. Wafers can come from Germany, Taiwan, or Japan, while chips can be fabricated in places ranging from Arizona, Ireland, or India. It's important to note that the U.S. imports a relatively small number of individual chips. Most semiconductors, even those built in the U.S., are sent to other countries that manufacture electronics and other devices, which are then imported back to the U.S. Different semiconductor companies play different roles in the chip-making process, from NVIDIA and AMD to Taiwan Semiconductor and ASML. Each has its own corner of the sector. It all makes for a massive ecosystem of global partners, and it's only getting bigger as companies continue to build AI data centers made up of tens of thousands of semiconductors.
Tesla's latest earnings underscoring a company in transition, record sales, but shrinking profits and promises of a new chapter in AI. CEO Elon Musk spent the end of the earnings call campaigning for his $1 trillion pay package, which is up for a shareholder vote in November. Joining me now, we got Ross Gerber, CEO of Gerber Kawasaki Wealth and Investment Management. Ross, always great to see you. So Tesla, I'm just looking, it finished the day in the green here, up about 2%. I want to start with that EV business though, Ross. Listen, Q3 deliveries, they were solid, but we knew they were going to be solid. The question I have for you as, Tesla investor, Tesla shareholder, what do you think, Ross, the underlying growth looks like for that EV business now, though, in the quarters ahead in this post-EV tax credit world we're living in?
Well, unfortunately, I have to tell you, I think this is as good as it's going to get. I think it's all sort of, we've maxed what Tesla's EV sales potential is, which is at about 1.9 million units a year. So, Tesla was always slated to make, ideally 10 million plus vehicles a year in the original plan. And so now I think we're stuck at less than 2 million and going down. So if the best they can do is close to 500,000 with the expiration, now I'm estimating they're looking at more like 1.6 million cars next year, and no analysts have that in their numbers because they always have this incremental growth irrelevant of the realities facing the business, and I just don't see where the growth comes from.
Well, some bulls, Ross, on this show have countered, they're looking at those new more relatively affordable models, Ross. Do you think that could drive demand? What do you think?
It's not affordable. I mean, if I rip out half the car and sell it for half price, it doesn't make the car more affordable. It makes the car worse at a cheaper price. So you're getting less for your money. That doesn't make it more affordable. What it means is they're diminishing the value of the product to sell it for cheaper. And that's a bad business strategy. It's a strategy of weakness when you can't actually convince consumers to buy your product, A, because you don't even advertise to create demand, and B, the CEO is one of the most hated people in the world. So there's a huge disconnect between what Tesla needs to do to sell cars and what they're actually doing.
So if this is as good as it was going to get, Ross, let me ask you then, were you selling here?
Well, I didn't sell because I've been selling, consistently for months. So I didn't necessarily use this as some new opportunity to sell because we've just been a seller for years now. We're kind of down to the amount of stock that our shareholders are pretty diehard Tesla fans and they don't want to sell. So we're not selling, substantially more stock than we have been in the past because we know we still have about an $80 million position and we manage about $4 billion. So it's about 2% of our assets. So I'm not that concerned about it. And a lot of our clients are big believers in Tesla. And I'd like to be a bigger believer in Tesla, but I think the bigger issue I have is what's going to happen if full self-driving doesn't work. And I'm still fairly convinced they're not going to get this to work by the end of the year or anytime soon until they accept that vision-only systems are not safe enough. And we know this as a fact. We have Waymo proving it every day.
When you're in your Tesla, Ross, do you have a Tesla still actually or no? You sold it?
Of course.
You do?
Of course I have a Tesla. I drive a Cybertruck.
Do you experiment with the FSD yourself?
I do it every day. And it's like an experiment in disappointment. So it's like right now when I go home, if I drive me home and it's about 3 miles, it just can't do it without me disengaging, and I have to pay complete attention the entire time to the vehicle. Now, on the other hand, I can call a Waymo right now, and it'll take me home I'll sit in the back seat, and it drives better than humans. I see Waymos doing stuff like, and I'm just pissed off. People are like, why are you so angry at Tesla? And I was like, because I see Waymos every day doing what I was promised that I'd be able to do years ago, okay? And I've spent tens of thousands of dollars on full self-driving between all the different Teslas I've bought over the last 5 years, and it's never worked. So I'm tired of the promises. It's time for Tesla to say, like, if it's not working now, why would it work later?
Ross, switching gears, shareholders like yourself, you're going to have a chance to vote on Musk's pay package. That's coming up in November. And Musk actually addressed that on the call. Let's take a quick listen to that.
There needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane. I just don't feel comfortable building a robot army here and then being ousted because of some asinine recommendations from ISS and Glass Lewis who have no friggin' clue. I mean, those guys are corporate terrorists.
All right, Ross, corporate terrorists, not holding back. But let me ask you, you're a shareholder. How are you going to vote? Are you going to vote yes or no on that pay package?
Well, just to predicate, I vote no on most pay packages for most of the companies I own because I think in general CEOs are vastly overpaid. So I just want to predicate that. But this is the most absurd pay package that has ever been created in the history of business, and not to mention the different tranches and what the vesting is so arbitrary and broad. And I don't even think the pay package is legal because I don't think there was any actual negotiation over the pay package, which was the same reason that it was ruled illegal by Delaware last time. And I think this is just going to add more lawsuits anyways. And I just don't understand why anybody thinks that this is a good idea in the first place, because he wants to build a robot army. And I'm very concerned about this risk to society.
But are you concerned, Ross, if he doesn't get that pay package, the risk that he walks?
And goes where? See, it's like Putin, it's like, oh, if you don't give me what I want, I'll nuke you. But Putin's, it's like Elon, where's he going to go? If Tesla stock goes down 50% because he leaves Tesla, who's going to lose the most? It's going to be Elon. So his whole house of cards is predicated around Tesla being successful. So he's not going anywhere. I think that these are empty threats, and there's nobody on the board that is willing to stand up to Elon because they're all his friends and relatives and people who are extremely overpaid to go along with everything. We know that that's the way Tesla works. And so they're going to approve this pay package no matter how absurd it is. And that's Tesla. And if you're an investor in Tesla, you're on this bus, whether you like it or not. And that's one of the reasons I've sold a lot of my stock, and me personally as well. But that's my choice. And I think other investors have to make their choice. But I care a lot about shareholder governance. And this is the worst example of shareholder governance in business history.
Ross, always appreciate your time, sir. Thank you.
Thank you.
Time now for What to Watch, Friday, October 24th. Starting off on the economy. It's finally here. September's delayed consumer price index coming out ahead of the open. Economists forecasting headline CPI to accelerate to 3.1% from August, while core CPI holds steady at 3.1% on a year-over-year basis. The inflation print providing a key piece of data for the Fed and the Social Security Administration, which will release the annual cost of living adjustment Friday. Taking a look at earnings, more names reporting on Friday, including Procter & Gamble, General Dynamics, and Booz Allen. Procter & Gamble announced results for the first quarter before the markets open. Analysts expecting the company to report weaker sales volumes for the quarter, and the company will provide a look at the state of the consumer. And another check on the consumer sentiment. That's out at 10 a.m. October's number expected to fall, signaling that people are feeling slightly less confident about the economy. That's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow for full market coverage on Yahoo Finance, starting at 7 a.m. Eastern, with Morning Brief Market Sunrise.